What's up, everyone? Major Tom here, coming back at you with another video. We're here to check in on our predictions for today. So today so far, the S&P kind of opened at a tank, and the American airline puts happened to be one of the best positions we could have possibly got into for this move today. If you look at the downwards pressure here, we had almost a 10% down. I remember my puts were up 75% this morning. I wish I got the full 75%. I sold them right about here to be safe, and I made about 70 or 60%, something like that. You know, still really good for a one-day flip, like insanely good. Going into tomorrow, I have a couple plays that I think are going to be really nice. There's a repeat opening up on American Airlines puts. Owning airlines companies right now into high inflation and rate hikes is one of the scariest or riskiest positions I think you can have. Reasons why: high inflation means oil prices are high. Also, rate hikes, not good for businesses. Also, you have the airlines that randomly pumped up 10% for no reason are now about to get just absolutely obliterated because it's like sticking out as like the best short on the market right now. So going into tomorrow, I think American airline puts on the repeat are a pretty freaking good plan. There was a couple people in the Discord that decided to take those again. I personally didn't, but I'm not against it. I actually think it's a really good play going into tomorrow. I don't hate it. I actually think it's really good. We saw the price go all the way back down here this morning at open. I wouldn't be surprised if we broke that level of support and went all the way down to here. At what price level is that? 1331. Look for 1331 to be a support line. If you see American Airlines going towards 1331, RSI starts getting oversold and the implied volatility is high, that's when you want to look to sell those puts if you're in them. Moving on, UVXY, okay? We had huge calls print towards the end of market today, right here. We got in two of these, which basically means tomorrow we're betting on the market to tank hard, all right? There's no mistake about it. The CPI index numbers are already out. The CPI index didn't really cause a market tank, but you know what will? A rate hike of 1.0 or higher. And that's what everyone's kind of expecting now that CPI data is out. They were just really slow to hop on that bandwagon. So we see UVXY kind of go down today. It opened at a nice 1430. For some reason, they let UVXY close at 1320, which I think is a complete mistake because this is a free play. I mean, as free as it gets. Like, they released bad CPI data, so you know J-Powell has to react. J-Powell already said that he doesn't mind raising rates higher than 0.75 basis points per meeting. And now he's basically being thrown into a meeting where the interest or the inflation is higher than he thought it was going to be. So, you know, now he's basically forced to, hey, bud, are you going to keep your word or not? My thoughts are, in this meeting, he's going to release a 1.25 basis point hike, which is extremely aggressive. I think it's going to happen. I think all the media is selling a 1.0 basis point hike. I think it's going to be higher. If a 1.25 basis point hike comes out, expect an entire market crash. I mean, entire market crash. Like, it's going to get really freaking ugly here really fast. A whole basis point raise is going to be insane. And just a whole basis point alone. If you get 1.25, dear God, like the interest rates are going to be at like 7%. That's insane. How the hell is anyone going to afford housing at 7% interest rates? Compounded. Like that's ungodly. Businesses aren't going to be able to start up. It's just going to be awful. Meanwhile, we have to address the meme stock basket because, okay, this is a little insane. Check this out. We had kind of a down day or a sideways day, and GameStop is still up another whopping 8% was the high today, and it closed at like 7% up, okay? We have to talk about this. The meme stock basket is getting a little out of control. the questions are starting to come up as to whether or not they're covering now, or like this is going to be the January 2020 2.0, when GameStop initially ran from $4 all the way up to $500 per share. There's now more stocks than just GameStop. Back in January, there's more stocks than just GameStop. There was Bed Bath & Beyond, COS. And if you look at the basket of meme stocks, surprise, surprise, it's not just GameStop. You see Bed Bath & Beyond, you see AMC, also just steadily climbing. I'd like to point out that AMC is showing calls towards the end of the day. And we look at Bed Bath & Beyond, we don't really see any pointers as far as where that's going. But if you look at GME, especially like right before close, you see a bunch of calls, okay? I think they're going to use this little market crash as a way to try and cover the meme stock basket. If you tank the entire overall market, you lower the price temporarily of these stocks, and you can buy these stocks at a cheaper price for a lot of shares and try to cover these shares while the entire market is dropping. It's the smartest way to cover the entire meme stock basket at one time. All right, you cover them all at once so that no one can take profit from GameStop and move it to AMC, or take profit on AMC and move it to GameStop, or take profit from either of those and move it to somewhere else. Okay? Cover them all at once in one basket as the market is tanking, so that you pay the least amount of money for it. If you do it before the dividend comes out so that you're not owing 4 times the amount of shares, even better on you. And I think this is what hedge funds are looking at doing right now. It's probably why the meme stocks are running. In my opinion, my other opinion is brokers and the DTCC are scrambling to write the books. Okay, you have a bunch of people or brokerage apps where you hit the buy button, and they gave you that, I gotcha, here's a cash equivalent, but not a share. All right, that's what's going on. These brokers are now writing the books before this dividend comes out, and every person who supposedly has a real share, they can't give them their dividend of 3 shares each. Why? Because there's more shares than are supposed to exist. So now they're writing the books, they're buying back all those fake shares, those synthetic shares, those brokerage IOUs, those DTCC orders that didn't get fulfilled, all of those orders that were sent to the lit exchange but didn't get executed. The books are being slowly unwound right now before the entire system is caught with its pants down when this dividend comes out and all these people go, hey, why don't I have 4 shares? I'm telling you, if the MOAS doesn't happen within the next 3 months, I don't think that it's going to happen. If a short squeeze doesn't happen on the entire meme stock basket like we saw back in January, I don't think that the short squeeze is going to happen at all. And it's the more I see this every day, this progression and how it's reacting to the overall market, the more it's starting to look like January. So that's why today we're loaded up on UVXY calls and we're loaded up on AMC calls. Why? Because in small trading accounts, and I've always said this before, hey, AMC or GME or whatever, it doesn't matter. The entire meme stock basket has to run. All right, they have to cover all of the meme stocks. If AMC calls are more affordable to you because GME calls are $1,000 plus per contract, that's fine. Buy AMC calls if you're trying to play this play. All right, but to say that you're not going to buy the Bed Bath & Beyond calls or AMC calls because you only believe in one stock is all right, man, come on. It's been running the same exact way that GameStop has this entire time. So at this point, I think we've proven that theory kind of wrong. And, I've been liquidly trading AMC calls and puts for the longest time here, playing the upside and the downside, just making stupid amounts of money because it feels like you just get really easy price execution on these calls and puts for whatever reason. Probably because a bunch of inexperienced retail traders are also trading with you on the options chain, and that's okay. You know what I mean? The name of the game is to make money, right? I wanted to show one more thing. Let's go to the 1 day. Scroll out. All right, let's delete that. All right, and let's add VIX. Volatility S&P 500. We're going to add that. All right. Before GameStop ran, look what happened to the VIX, okay? The VIX is like the inverse S&P 500, but really it's not. It's like a volatility index. If we look at UVXY as well, hold on here, I'm trying to show these. Man, it is really hard to compare these things. Let's just look at the daily, shall we? All right. So, typically, when GameStop goes up, UVXY goes down, right? So you're probably asking me, why am I holding UVXY calls and AMC calls at the same time? Doesn't make any sense, right? Wrong. I think that when calls for GameStop happen or when calls for AMC happen, it gives me an opportunity to ride these all the way up to the top right here, where I see RSI is now overbought. And then I can sell those calls, and then on the way down, I can sell these calls, okay? Which is better than not being in either of these to begin with. Since call and puts run so many percentage points, I'd rather be in both and then sell one at the high and sell the other one at the intraday high or the sympathy fall. Either way, that's kind of how I'm playing it. And I think that's a lot safer than not being in any play at all. To be honest with you, I think hedging is the way to go 100% of the time. And that's kind of what I've been playing and how I've been playing. And it's been really, really working for me. So I'm going to keep playing that way. And just some interesting things to point out. Traditionally, these move opposite, okay? But recently, I've started to see that when this spikes, this starts to follow it. And it's almost getting to the point where they're like moving at the same time. And I believe back in January, they were also moving at the same time. If I remember when the January squeeze happened, the VIX was at like $25 or something like that, or UVXY was at like $25 per share, which is insane. And UVXY today is like $13. So I think that if this starts ripping and causing the volatility index to go insane, that you can potentially make money on both while still using UVXY as a hedge for your position in any of these meme stocks. So that's why I'm kind of leveraged that way going into tomorrow. Very short on cash in the small money account, and I'm mostly cashed up on AMC calls and UVXY calls going into tomorrow. I think I have like 100 to 200 cash in my small money YouTube account. And then, of course, we have our thousands of DRS GameStop shares waiting for the short squeeze to happen if it does. And if it doesn't, that's all right. We have NFT gaming coming out soon, and the marketplace is just insanely valuable addition to the company. And it's going to continue to provide value as time goes on. And this split dividend is going to be awesome for everyone. It's going to give them more shares. It's also going to bring the price back down to a level where retail can FOMO back into the stock. Retail can't buy this stock right now. It's $140 something. Like, it's already hard enough for them to buy shares, but they can't make the options chain do what it did back in January because the stock costs too much. The average retail individual can't afford $1,000 per contract for calls. All right. So what's going on is these big money people are basically taking advantage of retail by just swinging options back and forth and controlling where the stock goes. Now, if you bring the stock back down to $30, retail has control again, and retail can just buy up all the call options that are in the money and then run the stock. When the stock goes even more and further into the money, then you're going to have the same situation that happened last January. So either way you look at it, they either cover now or they cover after this dividend split, or they're going to get gamma squeezed by retail, in my opinion. Also, they're going to get gamma squeezed by the pure value that's coming from the NFT marketplace in the form of video games via NFT marketplace. It's going to be like GameStop's adding a Steam marketplace basically to their business model, simultaneously adding a Netflix to their business model, because you can basically buy a TV show on the NFT marketplace. There's currently one on there right now, so anyone that says that's not possible is incorrect. So you have a Netflix, a Coinbase potentially, where you can buy and trade cryptocurrency, Netflix, Steam. You're basically adding 3 or 4 companies to this individual company. This company is becoming the Amazon. Okay, do you see this? This company is basically turning into an Amazon. Amazon started just selling online books. This company right here is an e-commerce company. It's got 2 major warehouses in the US. It's opened an NFT marketplace. It's selling art online. It's selling games online. It's selling TV shows online. It's selling music online. It's selling cryptocurrency online, and it's going to eventually potentially sell stock and be its own exchange, which is worth trillions of dollars. All right. This company has the potential to go way beyond what anyone thinks it could possibly be. And you have these short sellers that are trying to make $20, $10 per share off of it. It's the most ludicrous thing I've ever heard from a short perspective. All right, is the stock fundamentally currently worth $140 at this point in time? No. But do you really want to take the short side of this trade and pray to God that Cohen doesn't announce tomorrow that gaming is now live on the NFT marketplace, while hundreds of thousands of loyal fan base to this company rush to the NFT marketplace and just start buying up these games like it's a Tesla fan base? No, that's like the most ludicrous thing I've ever heard. Like, why would you take a short position against this knowing what's coming? It's absolutely insane. You have to be crazy in the head to even think about it. Meanwhile, while they release this marketplace and continuously improve the company, they're getting these kickbacks from IMX for millions of dollars for fulfilling these contracts, these contractual requirements for their NFT marketplace. And it's a win-win for the company, and I just don't see what short sellers have left in this stock. Like, if you're short on this, now's your last chance to close. I think that's why they're closing. They know now that the NFT marketplace isn't a fluke. It's out. They know now that the market overall is going to be at near an all-time low. Now's the time to cover if you're short on literally anything. And if you're not short at all, now's a decent time to take positions going into the CPI index and the rate hikes of greater than 0.75 basis points. It's why I think American Airlines puts or American Airlines shorts are a good play. Also, UVXY calls. Meme stock calls as well, just because of what's going on. You have a bunch of these companies that were over-shorted in good marketplace conditions. Now, all of a sudden, the marketplace conditions are bad, and all these stocks are extremely cheap, and there's an opportunity to be made in almost every single one of these. AMC is coming back. They had record sales last weekend in all of their theaters. The stock has to follow that valuation, okay? You look at the same thing with Bed Bath & Beyond. Like, it's at $5 per share at this point, and it's a full-blown retail, brick-and-mortar company that has hundreds of stores probably, and it's about to start e-commerce pretty soon, and you have to, and it might even spin off the baby portion of the store into a whole separate company, and you just have to ask yourself, like, what is the inherent risk of shorting Bed Bath & Beyond at $5? What are you trying to make, 30 cents, 50 cents off the per share? Like what's the point of shorting these companies anymore? It makes no sense. And yeah, that's just my take on meme stocks as a whole. You can actually see now the split date showed up on TradingView. That's nice to see. And I'm jacked. I'm jacked. For someone that has over 1,000 shares in this company, it feels really, really good to eventually, get out of this, start the hedge fund, and get back to trading full time. I've been waiting so long for this company to just explode the same way that Facebook did when it first IPO'd, the same way that Coca-Cola did when it first IPO'd. And this is just really, really exciting stuff. It's a new chapter in the business. It's a new chapter in future technologies. It's a new chapter in NFT and crypto technology. It's a new chapter for Bitcoin altogether and cryptocurrency altogether. And I think it's really going to reshape the way that the entire global online marketplace works for all electronics and all entertainment purposes. This is going to be an insane win for GameStop, and for anyone who's even doubting this, like, hey, it's cool if you doubt it, you don't think that this is going to be a thing, but does it really hurt to buy one share at $140? Like, this is still pretty cheap, in my opinion. $140 for a share is still pretty cheap. You're about to get 4 shares if you buy one right now. Now's kind of the last chance if you want to be a big owner in this future company that's going to have this entire marketplace with many different things in it. And, that there's value in that. And, this is kind of my warning to everyone. Tomorrow might be a really, really big down day, and your last chance to get any meme stocks if there's a major dip. So look at this right here. Major dip. You were able to get GameStop for like a $10 discount. We might see that again tomorrow because it's certainly setting up to be one of those. Okay, if we look at the price action right here, it looks like it's going to be one of those days. Look at the extended hours. We have the price falling quite a bit. This might be your last chance to get in on this company and get some extra shares. All right. If you're interested, if you think that the NFT marketplace is going to be something, which I do, we can look up GameStop/NFT. All right, the games still aren't out, but you can see the NFT marketplace is still up. It's still, doing great business. I think they traded, 2 million NFTs in the first day, the first 24 hours. All right, a lot of the NFTs are already sold out. This is by far beating OpenSea's numbers when they first IPO'd. So you're just combining so many companies into one right here. It's like an Amazon that's going on without any share acquisitions or any company acquisitions. Like, GameStop's not going out and buying other companies. They're making all this stuff from scratch. They're making all the brand new companies from scratch and incorporating it in their own business model. This is probably one of the biggest opportunities in the market right now. And you see all the entire other meme stock basket running with it. That's kind of my take on everything. I hope this provides clarity going into tomorrow. Again, our plays are shorting American Airlines, long on UVXY, long on meme stock basket. So take that with a grain of salt. It's not financial advice, but hell, we've been making a shitload of money in the last 2 weeks, and we're going to continue doing that. Peace out.